Welcome to Know What You Are Investing podcast, the show that cuts through earnings noise and brings you the strategy behind the numbers. Today, we're diving into Meta's Q2 2025, where AI isn't just a buzzword, it's the core mission. From record-breaking revenue to the vision of building superintelligence, Meta is scaling compute infrastructure, deploying AI across its ecosystem, and ramping up CapEx to levels we've never seen. We'll unpack Meta's ambition, the opportunities in ads, devices, and messaging, and the real risks from regulators and rising costs. Let's decode it.
Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. In this episode, we break down Meta's Q2 2025 earnings, a quarter where AI took center stage. From $47.5 billion in revenue to next-gen AI clusters, over 1 billion monthly users of Meta AI, the company is investing big on building superintelligence. We'll explore what's driving engagement, how Meta is reshaping its infrastructure, and what risks loom ahead. Let's dive in.
Yeah, that Q2 earnings call on July 30th, it definitely sent a strong message. Mark Zuckerberg, Susan Herrera, they painted this picture of a strong quarter, but they pivoted almost immediately to AI. It was striking. And the scale is just immense. Over 3.4 billion people using one of their apps every day. That's the foundation for everything else they're doing.
3.4 billion daily users. That number is just staggering. It's hard to even grasp. But like you said, Zuckerberg's immediate jump to AI on the call, was that mostly signaling their future plans, or is AI already the main reason for this quarter's good results?
Honestly, it felt like both. He wasn't just talking future vision. He framed AI as the engine, like driving their success right now. Yeah. And this audacious goal, personal superintelligence. Then Susan Lee backed it up with the hard numbers. Total revenue hitting $47.5 billion.
Wow.
Yeah, up a solid 22% year over year. Net income, $18.3 billion. And the EPS, earnings per share, $7.14. It really has had a positive tone, but all roads led back to AI.
Okay, so let's dig into those core financials a bit more. Beyond the headlines, what do the numbers really tell us about how Meta did this quarter?
Right, so that $47.516 billion in total revenue, it wasn't just a good number. It significantly beat what analysts expected. Yeah. Shows that 22% year-over-year growth, both reported and constant currency. Real strength there. Sure. And profitability was strong, too. Net income, like I said, $18.3 billion, giving them that $7.14 diluted EPS. Again, better than expected. Their main engine, the family of apps, Facebook, Instagram, Messenger, WhatsApp, that segment brought in nearly $25 billion in operating income. That's a very healthy 53% operating margin. The cash cow is definitely still producing.
And what about the long-term stuff? Reality Labs, that's always where you see the big strategic spending.
Yeah, Reality Labs revenue, pretty modest, $370 million, up 5%. But it kept losing money, a big chunk actually, $4.538 billion loss. So that confirms they're still pouring money into the metaverse vision, that long-term bet. But honestly, the most eye-popping number for me this quarter, capital expenditures, CapEx.
Yes. That CapEx figure definitely made me pause.
Yes.
$17 billion in just one quarter. That's huge. But when you think about their other big bets, does this jump in spending mean they're shifting priorities or just spending more everywhere?
Oh, it's definitely a strategic shift and an expansion. So Q2 CapEx, $17 billion. But the real kicker is the guidance for the full year. They narrowed the range upwards, now expecting $66 billion to $72 billion for 2025. That's roughly $30 billion more year over year, just looking at the midpoint. And even more telling, management explicitly said they expect similarly significant CapEx dollar growth in 2026.
Whoa, okay, so this isn't a one-off bump.
Not at all. This is a strategic pivot. It tells us Meta isn't just, using AI, they're building an AI fortress. Like unparalleled proprietary compute power. It's a massive infrastructure build.
Okay, so they're building the fortress. How did that commitment play out in their ad performance? That's still the main revenue engine, right?
Absolutely. Family of apps advertising revenue. Nearly $46.6 billion. That's up 21% or 22% constant currency. Online commerce was a big part of that growth. Ad revenue growth was pretty strong everywhere, actually. Europe, rest of world, leading the way, over 20% growth. Shows solid global demand. Total ad impressions served were up 11% worldwide. Partly engagement, partly ad load tweaks, especially in Asia Pacific. But here's the really critical part. The average price per ad went up 9% globally.
Okay, so more ads and higher prices.
Exactly. It means it's not just about getting more eyeballs. It's about Meta's AI making each ad dollar work harder, deliver better results for advertisers.
Right. So that improved performance is directly tied to AI. Can you break that down? How exactly is their AI boosting the core ad business?
Yeah, significantly. And they even name specific models. Zuckerberg pointed out a new AI-powered recommendation model for ads drove roughly 5% more ad conversions on Instagram and 3% on Facebook. Think about their Andromeda model for ads retrieval. It's like a super smart system finding the perfect ad to show you, leading to almost 4% more conversions on Facebook, mobile feed, and Reels. And then there's GEM, the Generative Ads Recommendation System. It's actually creating ad variations on the fly to match different audiences better. That boosted conversions by about 5% on Instagram.
Wow. So it's not just optimizing placement, it's creating content too.
Precisely. These aren't just small adjustments. They're fundamental changes driven by AI making ads way more effective. They said a meaningful percent of our ad revenue now comes from campaigns using these generative AI features. It's huge, especially for smaller businesses that maybe don't have big creative teams.
Okay, so the numbers definitely back it up. AI isn't just talk for Meta, it's really driving the bottom line. But what felt really different this quarter was Zuckerberg's big vision talk. That term superintelligence was everywhere. What does he actually mean by that? And how does it justify these huge investments?
Yeah, his definition is pretty bold, he said. AI that surpasses human intelligence in every way. The ultimate goal. Bring personal superintelligence to everyone. He frames it as empowering people, making them more creative, helping build communities, connect better, lead more fulfilling lives. It's, pitched as a societal shift, not just a new product feature.
And they've set up a whole new division for this, right? This isn't just folding it into existing teams.
It's exactly right. Meta Superintelligence Labs. It brings together their foundational research, product teams, the Fair Facebook AI research folks, and a brand new lab just for next-gen models. They've got Alexander Wang leading the whole thing, Nat Friedman on AI products and applied research, and Shengjie Zhao as chief scientist for the new push. They're working on current models like Llama 4.1 and 4.2, but also pushing hard on totally new models for next year.
What's the key research challenge that they're focused on for building AI fundamentally smarter than people? That sounds ambitious.
Well, Zuckerberg specifically called out self-improvement for AI systems. That's the crucial bit. It's not just about feeding it more data. It's about building AI that can learn and get better on its own. He sees that as essential to actually get to that smarter than people stage. He also mentioned a shift to small, talent-dense teams for this kind of frontier work. Suggests they think intense focus groups are the way to make breakthroughs.
Interesting. And what about open sourcing these advanced models? Meta's been known for that, but does superintelligence change their thinking?
It seems like it adds nuance. They'll continue to open source some leading models, but not everything. The reasons are varied. Some models might just be too big or complex for others to realistically use. Could just help competitors. And importantly, as AI gets closer to real superintelligence, they mentioned growing safety concerns.
Yeah.
That definitely plays into deciding what stays proprietary. It signals a more competitive landscape, maybe, where these models are strategic weapons.
Okay. And models that advance need incredible computing power. Which brings us back to the infrastructure story. These massive investments. We're talking gigawatts now.
It is genuinely staggering. Their commitment is to provide unparalleled compute. They're building these next-gen AI clusters on a scale we haven't really seen before, like Prometheus. They expect it to be the world's first gigawatt-plus cluster, a gigawatt, coming online next year. And then Hyperion, which is designed to scale up to 5 gigawatts over several years. Plus, they mentioned multiple more Titan clusters in development.
Yes.
5 gigawatts, that's like powering a small city just for AI compute.
Yeah.
It's mind-boggling, frankly. Makes the superintelligence goal feel a bit more grounded in physical reality, doesn't it?
It absolutely does. Puts the scale into perspective. And these are direct cost servers, data centers, networking. How are they actually paying for this enormous build-out? And what's the thinking on ROI for something this huge and long-term?
Right. These are the direct investments driving that huge CapEx jump we talked about. And it's continuing into 2026. They plan to fund a large share internally from their cash flow. They certainly have a strong financial position. But they're also actively exploring ways to work with financial partners to co-develop data centers. Basically looking for outside money to help build these things.
Interesting. So bringing in partners for the infrastructure build.
Yeah, it gives them flexibility. If their needs change or if they can get better financing terms, it makes sense. As for the payoff, the ROI, It's a split story. For what they call core AI, that's the stuff improving ads and engagement right now, the ROI is strong, and they measure it carefully. We're seeing that already. But for Gen AI, the really cutting-edge stuff, they admit they're much, much earlier on the return curve. It's not expected to be a big revenue driver this year or next.
So patience is needed for the biggest returns on that front.
Definitely. But leadership says they're very optimistic about the medium to long-term payoff across those 5 pillars of AI integration they keep talking about. It's a clear message to investors. It's a long game.
And all this compute power they're building, is it just for Meta's own use? Or are they planning to offer it as a service, like AWS or Google Cloud? And what does this mean for their overall expenses?
Good question. For now, the focus is purely internal, powering their own recommendation engines, ads ranking, training those huge frontier models, and handling future consumer use cases within their apps, not for external customers. The expense implications are pretty significant. Infrastructure costs are going to be the largest single driver of expense growth in 2026. That's depreciation on all this hardware, plus higher operating costs, energy, leases, maintenance, cloud services, network traffic. The second biggest driver, hiring more AI talent, paying those engineers. So yeah, it's a massive commitment both in capital upfront and ongoing operating costs. It really prompts the question for you, the listener. What do you think of this kind of all-in investment strategy? Is it the right move?
It absolutely screams conviction in AI, almost above all else, doesn't it? Suggests they see owning foundational compute as the key competitive advantage going forward. And speaking of those 5 pillars where they expect returns, let's look at how AI is already being used across Meta's products right now.
Right. Zuckerberg laid out these 5 areas. First, advertising. We touched on this, but the efficiency gains are impressive. Andromeda model boosting conversions by almost 4% on Facebook feed and Reels. GEM, the generative system, lifting conversions about 5% on Instagram, 3% on Facebook feed Reels by creating better ad variations. Even another model, Lattice, added nearly 4% to conversions. These aren't small improvements. AI is fundamentally making their ads work better.
Okay, ads are clearly benefiting. What about just keeping users engaged on the platforms?
That's pillar 2. Engaging experiences. AI is making content recommendations much smarter. They reported a 5% increase in time spent on Facebook and 6% on Instagram this quarter alone, attributed to AI. Video is a big part of that. Instagram video time up over 20% year over year globally. Facebook video time up over 20% in the US. And LLMs, large language models, are now driving a meaningful share of the time spent gains related to ranking on threads. It's even working behind the scenes. AI helped produce bug reports on Facebook feed and notifications by around 30% over 10 months. So improving stability too.
Wow, that's a broad impact. Okay, what about messaging and their hardware efforts?
Pillar 3 is business messaging. The big vision is every business will soon have a business AI. They're integrating it into ads, e-commerce sites, and click-to-message ad revenue in the U.S. grew over 40% year over year in Q2. So there's momentum there. Fourth is Meta AI itself. This was a big number, more than 1 billion monthly actives across their apps.
1 billion users for Meta AI already.
Yeah, huge reach. WhatsApp is the biggest driver, apparently people using it for info, homework help, generating images. It's also growing on Facebook for asking about posts, searching. The goal is to make it the leading personal AI. And fifth, AI devices. The Ray-Ban Meta glasses seem to have real momentum, sales accelerating, demand still higher than supply, which is a good problem.
It's still a good problem to have.
They also launched new Oakley Meta HSTN Performance AI glasses, better battery, better camera. And they say Meta AI usage is growing on the glasses. Briefly, the Quest VR ecosystem is also growing. New Xbox edition launched, record interest in cloud gaming. So moving beyond just gaming. And yeah, more Reality Labs news coming at Connect on September 17th.
And Zuckerberg has that really interesting take on the glasses, doesn't he? Almost like they'll become essential.
He does. He thinks future glasses with AI, maybe displays, could create a significant cognitive disadvantage if you don't use them. Basically, essential tech. He sees them as the ideal way to blend the physical and digital worlds, tying back to the metaverse vision. He noted this sort of quirk that powerful AI is here before the cool holographic displays are widespread, but argues Meta is several years ahead on building out glasses, implying they have a head start on the form factor.
Okay, so AI is getting baked into almost everything Meta does, from the core apps to these future devices. How does this all connect back to making money? Growing users is one thing, but how are they actually improving monetization?
Good question. So first, community growth is still solid. Over 3.4 billion daily users across the family of apps in June. Those better AI recommendations are clearly keeping people engaged. Second, monetization efficiency. They're doing a few things here. One is expanding ad placements. They're starting to put ads in the feed on Threads, and also in the Updates tab of WhatsApp, that's status and channels. They're even testing channel subscriptions.
Ads on Threads and WhatsApp, that's new territory.
It is. It's a gradual rollout, low ad load to start, but it clearly signals they want to monetize these platforms eventually.
Yeah.
Though, for WhatsApp, they were careful to manage expectations.
Right. WhatsApp monetization has always seemed tricky. Are these ads going to move the needle soon?
Probably not. Management said WhatsApp ads likely won't be a meaningful contributor to revenue or impressions for the next few years. It's used more in lower monetizing countries, and they have less data for targeting compared to Facebook or Instagram. So challenges remain there. But where AI is helping monetization right now is improving marketing performance for advertisers. That advantage plus suite of AI tools. It's getting broader use. Streamlined campaign setup, generative AI tools for ad creative. Nearly 2 million advertisers are using things like AI video generation or image animation now.
So making it easier for businesses, especially smaller ones, to create effective ads using AI.
Exactly. And they're also evolving the ad platform itself. They finished rolling out incremental attribution globally. That means advertisers can see which sales only happened because of the ad, builds confidence, proves ROI. Plus, their omni-channel ads combining online and in-store results are showing a median 15% lower cost per purchase compared to just optimizing for website sales. That directly helps businesses' bottom lines.
So it sounds like this dual strategy: keep growing the user base with AI-powered engagement while also using AI to make ads more effective and easier to manage for businesses, thereby justifying ad spend. Okay, but while Meta is charging ahead with AI and growth, there are these significant storm clouds, particularly in Europe. What's the latest on the regulatory front there? How serious is that risk?
It's definitely serious. They described an active regulatory landscape and specifically increasing legal and regulatory headwinds in the EU that could materially hit their business.
Yeah.
The main flashpoint right now seems to be the less personalized ads LPA offering. They introduced that back in November 2024, trying to comply with the European Commission's feedback on the Digital Markets Act, the DMA.
That's the big EU tech regulation. And Meta explicitly warned about this LPA approach, didn't they?
They did. A very clear warning. They said the European Commission might demand further modifications to LPA. And those changes could lead to a materially worse user and advertiser experience. And here's the crucial bit. They warned this could have a significant negative impact on our European revenue as early as later this quarter. So even though Meta is appealing the DMA decision, regulators could still force changes while the appeal is ongoing. This isn't some far-off possibility. It could impact their numbers very soon.
Wow, that really raises the stakes. How do they possibly balance pouring billions into AI infrastructure and growth while facing regulatory decisions that could just kneecap their revenue in a key market like Europe? It feels like a real tightrope walk. Beyond the main presentation, the Q&A with analysts, that often gives you a better feel for management's real thinking. What were the key takeaways from that part of the call? Any important signals?
Yeah, several things stood out, mostly reinforcing their core messages, but with a bit more color. On AI progress and the compute path, Zuckerberg doubled down on his view that being aggressive with AI timelines has paid off. He mentioned internal teams using Llama 4 to improve the Facebook algorithm quickly, calling it profound. Basically saying their speed justifies the huge investments in talent and machines.
And what about their open source approach? Did they clarify that more, especially given the superintelligence safety concerns?
Yes, the open source AI nuance. They confirmed again, leader in open source, yes. But releasing some models, not everything. The reasons again, complexity helping competitors, but increasingly those safety concerns around really powerful AI are guiding what they keep in-house. It suggests more strategic control over the crown jewels.
And the financing for all this CapEx, you mentioned they might look for partners.
Exactly. CapEx financing and ROI. Susan Lai confirmed they'll fund a large share internally, but yes, actively exploring ways to work with financial partners to co-develop data centers. Getting external financing offers flexibility. And again, reinforcing the ROI split. Core AI is strong now, Gen AI returns are much further out, but they're optimistic about those 5 pillars long term.
And how does this massive spending square with profitability? Are they sacrificing margins for growth?
They addressed that. Investment cadence versus profitability. Management was clear. Operating profit growth won't be linear because of these huge AI investments. But they believe these are attractive investment opportunities that will lead to compelling profit growth later on. They're cutting back elsewhere to fund this. Their core belief seems to be using every GPU themselves for things like AI-powered customer service yields more long-term value than just renting out capacity. Very long-term thinking. Oh, and finally, shareholder dilution. Susan Lai emphasized they're focused on minimizing it, using their strong finances for investment, yes, but also continuing share buybacks to offset stock compensation and paying the quarterly dividend, trying to balance growth with shareholder returns.
So putting it all together, what's the big picture takeaway from Meta's strategy? It sounds like an almost single-minded focus on AI, balanced against financial discipline and navigating serious external risks. This deep dive into Meta's Q2 2025 earnings really shows a company betting the farm on an AI-driven future, building the infrastructure to match that superintelligence vision. But, as these compute costs skyrocket and those regulatory headwinds in Europe look really quite threatening, the big question is, can this incredibly ambitious vision turn into real, scalable, sustainable returns fast enough to keep investors happy? For you listening, maybe the question is this a calculated masterstroke that defines the next era of tech, or is it just an incredibly expensive chase after a future that might take longer or look different than they expect? That wraps up our Meta Q2 2025 recap. With AI-powered ad models, billion user engagement, and a bold vision to deliver personal superintelligence, Meta's playbook is ambitious, expensive, and big for the long term. But with regulatory pressure building in Europe and CapEx soaring, can the returns scale fast enough? We'll be watching. Thanks for tuning in to Know What You Are Investing podcast. What they do, how they grow, why it matters. Catch you in the next episode.
Meta's Q2 results are a masterclass in ambition. Billion user engagement, superintelligence moonshots, and infrastructure at gigawatt scale. But with great scale comes great spend and regulatory speed bump. Will Meta's long game pay off? Time will tell. Thanks for listening to Know What You Are Investing, where we go beyond the headlines to help you see the strategy behind the numbers. What they do, how they grow, why it matters. Until next time, stay curious and stay invested.